Welcome back, folks. Greg Silverman here, CIOs and bow ties. Another Come Learn With Me session. Let me just step out of the investment world for a second. And man, what a weekend this has been. It's just crazy stuff, right? Just being glued to the TV, watching the Ukraine and Russia invasion of Ukraine. Man, never thought in my days we'd see world war like this, or war, should I say. So very interesting. We're tracking the progress there very closely. We're kind of fixated on it. But take a look at some of our LinkedIn mini groups below. Some of the themes that I guess are rolling out here are being echoed. We've had a big pickup in the cybersecurity group for obvious reasons, a big pickup in the uranium group. And these are all investment focused groups, so how we look at things from an investment angle. And crypto continues, despite the kind of hammering in prices, crypto continues to gain interest. So keep your eyes on those groups. All right, let's read this one. The SPAC market starts 2022 with abysmal losses, abandoned deals. The SPACs look like another highlighting tool. We just kind of lost track on it. Okay. All right. So I said SPACs look like another, I guess, euphoric vehicle. The oversaturated SPAC market is continuing to get crushed in the new year as speculative stocks with little earnings fall further out of favor in the face of rising rates, while a growing number of deals were abandoned in the tough environment. Companies that went public via blank check deals have been among those worst affected by January's tech-driven sell-off. Meanwhile, faced with unfavorable market conditions, many sponsors have been forced to scrap their proposed deals, sometimes even before the SPACs got listed. The SPAC bubble is bursting, says Chris Sanek, Senior Equity Research Analyst at Wolf Research. SPAC shares are extremely volatile due to their speculative nature. The proprietary CNBC SPAC Post-Deal Index, which comprises of SPACs that have completed their mergers and taken their target companies public, tumbled 23% in January, even more abysmal than the tech-heavy Nasdaq Composite's 9% loss when it suffered the worst month since March 2020. Ooh, look at that. Some of the biggest losers last month include clean energy player Heliogen, self-driving related companies Aurora Innovation and Embark, and 3D technology company Matterport, which all tumbled more than 50% in a single month. SPACs stand for special purpose acquisition companies, which raise capital in an initial public offering and use the cash to merge with a private company and take it public, usually within 2 years. The market enjoyed a record year with more than $160 billion raised on US exchanges in 2021, nearly double the prior year's level, according to data from SPAC Research. Investors once piled into shares of these empty corporate shells, hoping they would hit a home run. It's like yet another mania that we see out there. After a year of issuance explosion, there are now almost 600 SPACs searching for acquisition target, according to SPAC Research. As the market gets increasingly competitive, some announced deals failed to make it to fruition. The planned merger of Fertitta Entertainment and the blank check firm Fast Acquisition Corp was called off at the end of last year. Recent deals that have been abandoned also include online grill retailer Barbecue Guys, fintech firm Acorns, and cloud software platform Service Max. I guess in 2002 you could have just said .com. Just kidding. Meanwhile, there has been growing number of SPAC listing withdrawals, meaning the sponsor decided to pull the plug on their listing after filing the initial S1. There were nearly 20 such cases in the month of January, a jump from only single digits in the prior 2 quarters, according to SPAC Research. Okay, there you have it, folks. I'm reading this and I'm going, well, maybe it's time to buy SPACs. I don't know. They seem pretty cheap right now. And so, SPAC is basically a vehicle with money in it that can be used to acquire another vehicle. So some of them may be trading below their net asset value. I don't know. That's what happens sometimes in this market. Anyway, worth more research. Thank you for joining me for another Come Learn With Me session. And take a look at the links below, subscribe and like, and come join me again soon for another riveting episode of Come Learn With Me. Greg Silverman, your Chief Investment Officer, out for now.